Good morning, traders. Welcome back to another live stream here. If you are new, my name is Zach. This is Real Deal Futures. Before we jump into it, make sure you read what is on the screen right here. Trading is risky. Most traders do lose money. I'm not a financial advisor. I don't provide suggestions, financial advice, recommendations of any kind. Everything you see or hear from me is for entertainment purposes only. Excuse me. Read CFTC Rule 4.41 on simulated trading, which is what this is, even in funded prop firm accounts that I am trading here with you guys, and the affiliate and partnership disclaimer that says I stand to make money from links in my content. Let's jump into it. Market is open. ES is moving. Going to be looking at micro ES here on the Project X, Topstep X platform. I got 4 accounts copy traded. Being copy traded here, we are just cracking overnight low. We are just 2 minutes into the open. Let's go ahead and jump out to the daily like I like to do. Good morning, good morning. What's going on, guys? Let's jump out to the daily. Let this chart just reset here. Take a look at what we got going on. We can kind of do some really high time frame analysis. Just kind of look at where we're at, because I'm starting to see some of those calls. Bottoms in. We're about to sell off, and everything else in between. Got some interesting markup movements based on the new contract we have rolled to the June contract. You can see up in the top right-hand corner, we are on the MESM contract. So the June contract coming over from March. If we zoom way out, we start to look at years of data. We know that U.S. indices have been going up for quite a while. We really had a bullish run all the way into the new presidency here this year. We had a nice push up back and forth, into January, and then starting, mid-February, mid to late February, we had this sell-off coming into where we're at now in March. And where we're at on this chart, interesting spot. We've started to kind of find some buyers down here, right around this level. Currently trading the too zoomed out to see it. I got too much stuff overlapping. But bottoming out here just a little bit. We found a couple of bullish days after some gnarly selling pressure. Yesterday, again, another consecutive day closing above prior bar high, which we haven't had in quite a while. We haven't had much breaking above prior day high, let alone closing above. So, finding some buyers down here, really just, some support where we haven't seen that week over week for quite a while. Today, I'll get rid of this line just so we can see the top and bottom wick here. Today, we are opening up to the downside. We are high in yesterday's range. We'll start to zoom in and see that, but you can see this daily candle forming. I think we have an opportunity to go either way here today, right? We do have major news tomorrow. We have FOMC rate tomorrow. That's 2 p.m. Eastern, and then the corresponding press conference that happens at 2:30 p.m. where Jerome Powell just ruins everybody's day. So I could see this, kind of just chopping around, forming somewhat of an indecision candle up here. I could see us selling back off down towards the lows. I could see this flipping into a bullish candle and, just being a pullback before a crack higher. Kind of what we saw yesterday. We just had a lot of chop in the morning. That really, really choppy day. I'm really happy to say I stayed out of that with you guys in that morning session. Here's what the choppiness looked like yesterday. We finally made a decision, 2 p.m. to start moving to the upside, but I saw a ton of red, ton of blown accounts. I'm lucky enough to have a lot of insider, not insider look, but just that I keep a good tab on what's going on in the futures prop space. And it was a nightmare for a lot of guys yesterday. A lot of guys got caught up in this. So when I don't have a no trade session, I like it to be when there is chop and I keep myself out of just not a lot of opportunity. And we did have that yesterday. So, just kind of taking a look at where we're at, where we're opening up here. We have, session changeover kind of sold off a little bit. We corrected a little bit back down towards the middle of that range, towards volume point of control from yesterday. This, high area of volume that we put in didn't come all the way down to these highs until we are, doing that right here, approaching value area low from yesterday. But we pushed up, got back above VWAP, and then into pre-market, sold off, tested VWAP multiple times, and now we are continuing to sell back off right here, right now. So relative to where we are in yesterday's range, again, I've been using a volume profile, just a little bit of extra help to kind of tell where I am as I drop down to the 1 minute relative to yesterday's trading, what happened on yesterday. Prior day high and low give me that, but along with that, the volume profile, fixed range volume profile on the regular trading session hours helps out as well. Gives me the middle ground, point of control, area of high volume traded, and value area high and low. Again, just kind of a reference on what that profile looks like and where we're at relative to that. So right here, right now, we are down below VWAP, cracking overnight low, the overnight session low, which is put in right here, right before we opened up. We are approaching value area low. We start to come down below that level. I think this discretionary zone is coming off of, yeah, I'm going to get rid of this. We come down below that. Yeah, next area that I could see us finding, actually, you know what? Let me pull that back up. Yeah, I'm not going to leave that, but next area that I could see us potentially finding some buyers is down this, temporary volume point of control, right down around this 56, 70s, right down around there. And just for fun, I'm going to draw a zone there because it's been tested multiple times. It was the last test before this big pop up at the bottom of this news candle here. Area of high volume. I could see us potentially, potentially slowing if we come through this area pretty quickly, which we are right now. Down around here, maybe before we get all the way down through prior day low and even lower. We start to crack prior day low. I am going to zoom out again, maybe get some additional areas on my chart. I'd be looking all the way down here. I'll actually throw that on. Just down around all of these lows, tested multiple times, kind of before we start to come into an area of low volume on the visible range volume profile, temporary volume profile, whatever you want to call this. And then, second to that would be all the way down here, lows of this high time frame area. We start to push to the upside. I'm looking at this area coming off of all of this consolidation right here, last high looking left before we really started to sell off. And again, corresponds with the volume profile, nice big high volume node there. So neutral, we can go either way. Right here, right now, it's looking pretty damn weak. Shorts down to this area if you were really aggressive off the open, which I don't like to be here in ES. I could see that. But we are going to drop to the 1 minute chart, zoom out so my VWAP corrects itself. And we'll watch this bad boy open up. I will throw this line back on my chart just so we can see the 930 open. That vertical line is the 930 open. And yeah, we'll kind of let this thing open up. I don't want to get too aggressive this morning. It is rollover. Rollover week, rollover day, roll day, whatever we want to call it. It's referred to as a lot of different things. Often generates some kind of odd price movements, right? Like I haven't been in the futures market for forever. I spent the most time in Forex, but watching the futures market day over day, every single day, putting tons of hours on the screen, I get some of this rollover week, right? It doesn't happen every often. But we often do see, and the common concern, here we go, selling off. Common concern is, rapid changes in volatility, big changes in price movements because we have larger market participants getting situated with that rollover, with the new contract. And that can kind of translate to some interesting trading conditions for us. Looking at Bookmap this morning, the order book is pretty thin, right? Relative to what we saw yesterday, because I'm on the new contract here, it is pretty thin. We do have some pretty big stacks of orders right now, really right below price at the 85s. Oh, yeah, they were coming through. Ooh, this is interesting. Yeah, right at the 85s down below price right here, right now. Sorry. I was just kind of getting situated with the way this Bookmap is looking. But outside of that, it's pretty thin relative to what we've seen. So, and again, fresh contract, right? So that's not abnormal. We got orders filling right there. Quite a bit of volume being traded to the downside right now. I would be surprised if we found buyers immediately without selling off a little bit further. We are coming into this area right here. This is going to be another potential area to watch out. But all the way down here is what I'm looking from higher time frames. Got a sell-off coming right into the open, man. This is looking weak. Looking very weak. Looking very weak. Again, I'm flexible today. No real strong bias. I don't like to carry a massive bias anyway, coming into the U.S. indices in the 1-minute chart. Interested to see if we come down into this area of high volume when I'm zoomed out, you know, in the 5-minute, the 15-minute, we can see this a little bit better. Or if we find buyers before this, crack back up. We may want to retest this and start to sell back off. But immediately, I'm going to be looking to the downside unless we come all the way back through this. We find buyers here. I really don't have any trade. If we got all the way down here aggressively, buyers really started to step in, and then we formed some structure. You know, we pulled something like this. Started to kind of break structure to the upside. I would look for a buy. If we just rejected really harshly here and we just, you know, sold directly off, I wouldn't have anything, but I could potentially look for a buy after retesting, you know, a discretionary area on the chart. But outside of that, going to stay patient, let this open up. Again, I think we could see some wild movements in candles today. Kind of hard to really anticipate what that looks like, but we'll let this thing open up. Let this thing start to move for us. Try to reset. That volume profile is looking funky, man. Sorry, I don't mean to mess you guys up with the chart so much. Let me reset this, and we'll let it. I get a little bit twitchy with the chart, back and forth in the 1 minute. I like to be zoomed in, but I also like to bounce out and kind of just see what's going on. But I appreciate you guys hopping on. Good morning. Welcome to the show. Again, if you're new here, my name is Zach. This is Real Deal Futures. I'm here almost every damn day, trading live, free with you guys, straight from my trading platform. This is Topstep X. Again, I'm copy trading 4 funded accounts here. No trade yesterday on the live. Happy to have stayed out of that chop. I would not have taken anything but losses looking at yesterday's price action until very late in the afternoon. And even then, we just kind of decided to drift. Decided to push to the upside and run the highs and just have this really nice strong drift to the upside. So that didn't present too much. Interested to see if we kind of blast through this area of low volume that we came through quickly back up to these highs, or if we are going to find some sellers here and continue lower. I think if we start to break above this, we're going to move quickly back to the 5,700 level, you know, right around this area, overnight low. Again, you know, a little bit of volume traded here, this area of consolidation before this move to the downside. If we turn back down, I think this is just going to be a retest of this value area low, maybe coming into play, right? There's some higher volume traded right here if I zoom out and we look back, and we are going to continue lower. That looks like what we might try to do here in ES. Yeah, again, looking at Bookmap, nothing, really nothing crazy. Whoa, that's some volatility right there. There we go. There we go. That's some volume behind that one. Wow. Again, if I look on Bookmap, you know, real zoomed out, the way that I like to do, kind of scoping out the order book for big orders above and below price, we don't have any of that. We've got some small, you know, small stuff for ES, 100 lot, 150 lot on the book. Right down here at 75, looks like we got about 130 or so that's staying on the book right now that we're looking to come down into right down here. We'll see what happens when we get down here. Again, I don't know that I want to get aggressively long on this because this is looking very weak right now. I'm not sold that we just tear everybody's faces off to the downside. You know, here's where this level's coming from. I'll kind of give you a little bit of it right here, right? You know, right off of this area of consolidation. You know, retest last low before this big impulsive move to the upside. I think this was an 8:30 candle. Yeah, it looks like an 8:30 news candle. I could see it retesting this zone and then pulling back up to, you know, to at least retest, maybe before continuation lower. We certainly stand the chance to just sell off, break prior day's low, and start ripping everybody's faces to the downside here. I don't know that we get that today. Again, I don't need to speculate on too high a time frame here. It's the 15-minute. You know, we're trading the 1 minute. We're pretty zoomed in, looking for basic market structure, price action, volume. Simple trades, structuring, you know, right around a 1-to-1 for me has been working beautifully. Not trying to hold on to these big moves, maybe grabbing a couple wins, get in, get out. get in, get out, get paid, as Take Profit Trader says. So we'll see what happens down here around this level. See how good my zones are today. But this is looking awfully weak. We do have now some coming on the book at 660. That's quite a bit of liquidity looking at Bookmap. Again, I'll show you guys Bookmap. This is what I look for on Bookmap, right? This is algorithmic stuff. Liquidity bands, liquidity providers, algos, you know, whatever we want to call that. The market makers, you know, whatever. I don't really pay attention to this. Here's what I'm paying attention to. Big stacks of liquidity that are on the book that price may come down into, and when we get there, see a lot of volume traded and some volatility. Right here, we've got 263 on the book, at least for right now, showing down at 56.60. That's an interesting level to pay attention to. We got 130 some odd orders right here at 56.70. And that's what we're looking at. This is level 2 data. We are looking at an order flow software called Bookmap. This is your current order book. This is quantity of orders, live liquidity resting in the market, changing in real time. This is your real-time heat map right here. Everything to the left is historical data, just like a candlestick chart printing in real time. Price in between here with volume bubbles shown as a best bid and best ask. Then we got some other tools down here, cumulative volume delta, different volume profiles. So I run this on the side just as a little secondary piece of information. Tell me where I might be wanting to pay attention to a level that I might not be watching. So yeah, I think we come down a little bit lower. Potentially check out that 660. Let's go ahead and throw a line on the chart down here. Make that one a light orange. That is a Bookmap liquidity level that I'm gonna pay attention to. We do have it at 70 as well. I think we're likely to come into that and see some volatility. But again, high volume area that we're just tapping right here and finding some buyers. Not not completely surprised, right? Like, these zones aren't magical. There's nothing super duper special about the way that I draw them, but you can see some of the reaction that we see. Now, again, I could see us potentially, just based on buyers being down here, potentially come through the 70s, through the 60s, maybe through prior day low, and this is a really, really aggressive selling day. I don't have a strong enough bias on this just yet. We got our 15-minute opening range right here. This is the low. Don't have a way to structure risk to the downside on this. Would have to be all the way back up here for a stop, and it's just not it. See what ES has for us today. Let's take a look at the other markets. Similar structure out of YM. Got to get on the new contract for these. Very similar structure out of NQ as well. These are selling off a bit. Yeah, Mag 7 looking pretty dang red. Really across the board. Tesla down 5%, Nvidia down over 2.5%, Microsoft down 1.5%, Meta down 2.5%, Google down 2%, Amazon down 2.5%, Apple pretty much flat. It's ever so slightly red. Again, not that I really take into consideration all of that fun stuff, but just to look across the board at my watch list and see all red, complete red across the board is is telling here. Yeah, we may continue selling off from here, man. This may just be break and retest structure, the downside. Depending on what happens, I may look to jump into a short. Just looking for this to continue. Down below VWAP, really aggressively selling off. Into the open, can this be a pullback down just before we blast off? Sure, but I might try a quick short here coming up. Just based on these levels of liquidity that I'm looking at on Bookmap that may want to get tagged. We got some here at 85 that we didn't grab. That's a little bit troubling. I got about 120 on the book right here at 85. Right here, rather, at 85. But we might leave that and just head to the downside. Yeah, we're losing just a little bit of momentum. There is volume behind these, these bullish candles. 5 would keep me out of a short with a stop loss right here. I can't take it with that. But we have orders sitting on the book down below, selling pressure down below VWAP, breaking overnight low, broken retest value area low, and now continuing lower. This is a short play for me, so I'm gonna look to take it to the downside. Probably, more as a breakout if we continue lower. Maybe run, around a 12-point stop. I'm going to try this to the downside from here, guys. This is looking weak. We are consolidating. I'm going to put this trade on, retesting these lows, looking for a breaking continuation. Not going to be something that I hold all day. Look to grab a quick 1-to-1. I don't know if we find support here. We are certainly not blasting through the way that I would have liked on that candle right there. But that's a area consolidation, right? Pulling back up. Not getting a retest of massive levels, but just flowing with this downtrend structure. Not going to try to fight it from down here. And look for a breakout to the downside. We have liquidity down below. That looks good for this. Again, we have orders up here at 85, which is a concern for me. I'm trying to get a feel for where I want to place this stop loss. Probably just going to go tighter with it. I don't know that I would want to let it come all the way back up on me. But let's see if we can get some continuation down towards the 70s. And I'm going to watch Bookmap and manage this one like a hawk. I don't think I'm going to hold on to this one for a long period of time, guys. Yeah, we got too much up above. Man. This is tricky. Yeah, here's how I'm going to play this, guys. I'm going to go tight on this one. I'm going to go stop just above these highs. I think if we come back up through this, we are hitting the... well, it's 85. I'm trying to figure out this stop loss placement. Two ways to do this. Run it wide out here, allow a retest, or run it real tight. And I'm just not exactly sure. The trade's probably going to play out as I'm trying to figure this. To the downside, but we have orders at 85. I don't know that I want to allow a retest of that. We're not breaking out to the downside just yet. I think I'm gonna have to. Yeah, I'm gonna leave this up here, just a little bit wide. Let's say the 90s. Allow about 5 points above that. If we break out and then come back up, I might clip it right here, right below that level, because I think we are just going to continue to the upside. But I want to see this thing break right here. I'm going to leave my stop loss up here, and I may manage this. Seller's trying to take it lower from this level. Again, not something that I'm going to hold on to for a long period of time. This is interesting structure, the way this is forming on the book. But short from 56, 75 and a half. 3 micros, not a ton of risk. There we go. Getting a breakdown towards the 70s. Can we get through that? Would really like to see some momentum here to the downside. We still have orders there at 70. We're finding buyers. I'd like to see a break and push down towards the 60s. I don't know that we get it here. I don't have a ton of confidence in this one. to be honest. It's something that I got to take because it does line up with my approach. We're selling off, simple break and retest structure. You know, it pulled back, gave me a way to get in, selling into selling pressure down to the lows, you know, preempting the breakout. We are breaking out to the downside. Objectively, this looks okay. I just got something on Bookmap that I really don't like, and these situations get tricky, where I can easily take myself out of a good trade. I gotta watch what happens down here. Do we continue? No, find buyers at 70. Got to see a lot of momentum out of this one, or we got a little breakdown below. This would have paid for a quick 1-to-1 if I was really tight with this stop and went a little bit heavier with risk. We may really break and run, and I think I'm going to leave this one on down to the 60s. That's going to be my game plan. I could take it here and just grab, you know, small profit and kind of reassess. But I think I'm going to allow for a retest and a move down towards the 60s through this level. As I say that, I'm watching Bookmap, and I don't love it. There we go. Got some selling pressure. Can we get a continuation out of any of these moves to the downside? Or is it just going to be this kind of slow grind? There we go. Can we see some momentum out of these moves, man? It's just slow moving. Buyers stepping in on every one of these little candles to the downside. We are still moving, but it's not a whole lot of momentum. It's just not the big push that I would have liked to see. Something along these lines or something along this. Liquidity back up at 80. Get some momentum to the downside. Let's see if we can't grab something down towards the 60s. Does that stay on the book? Get a little bit more of a push out of this bad boy. I'm going to take it off. I'm going to grab this right there, guys. I'm not going to wait for this to come down into 60. That area lightened up a little bit. We may get a nice breakthrough. I'm going to take it on that push down. Yeah, $144 across 4 accounts. I'm just not liking this. I don't know, I don't know if my intuition, my discretion is going to serve me well at all today. I don't think it is. I just don't have a strong short bias today. I really don't. I'm cautious in this level. I didn't like the way this moved to the downside, although we continued. This is still on the book. Now it's getting a little bit heavier. This was heavy, right? We had quite a few orders down here at 56.60. Started to lighten up. So we had like 330. I'll show you what this looks like. We had 330 on the book down here for quite a while. You can see this line right here. This is the 56.60 level. And as we started to come towards it, we had this overlapping a little bit, but you can see real orders, 340 on the book. After we kind of overlapped and then came away from it, we had, well, it's overlapping. We had like 180 on the book. So we lost quite a few orders there. Still likely for us to come down into it. But as we start to get closer to a level that I'm targeting and orders start to come off the book, that's an indication that we might not want to come down into it. It might not be such a great level to be targeting, and we might start to drift away from it, kind of like we're doing right now. Along with that, just the way that buyers were stepping in after every push lower and not really giving us that nice, strong momentum to the downside, right? A big volume, bearish candle. I just don't have as much confidence in. Stop loss placement, not amazing up here. I went back and forth on that one. I think what would have been a better trade on that would have been a really tight stop, right? Right as we come back down and get this aggressive, sell to the downside, I entered right here. Instead of trying to mess around with a stop loss, all the way up here like I was, just come really tight down below and say the thesis is this bad boy is going to break and run to the downside or it's not. And, that would allow me to grab my quick, 1-to-1, or even better the way, we waited down here 1.5 to 1. And if I get stopped out, small risk on, and, this is likely to come to the upside. So that's definitely the area for improvement on that one. Stop loss placement, right? Like that's a clean area, right? If you're going to say, price comes all the way back up this way, we're dead wrong. So if you're going to run it like that and run it wide. Is my 2 cents, for me. I'm talking to myself here. But if I'm going to go for a breakout to the downside and the thesis is this bad boy is about to break right here, right now, I'm entering on selling pressure to the downside. If it doesn't break and it pulls back up, you're wrong. You're not going to get that trade. So that's it. You're out. So make that the trade. This way you don't have to, decide on placing a stop loss in some half-ass area up here and something down here. Again, we did have stuff at 85. Right above this that was a little bit concerning. I felt if we came into that we could feel see a little bit of a crack, maybe not go test this level and continue. So not a bad trade, right? Winning trade, can't be mad with green. But that's something that I would have liked to just have heavier risk on. That should be like a 5 contract trade, right from this area, right? Same exact entry's fine. Thesis is good, but just make the stop loss appropriate. Probably something like just, like 2 or 3 points above that high, right? Just allow for a small retest. So, what would I really want to size for that? Just as I think this out with you guys. Yeah, it could be like a 5 contract trade easily. And then, that's my $200 day right there, across 4 accounts. Don't have to shoot for something major all the way down here where I wait for it. If you're going to go for this all the way down to prior day low, that's cool. My personal opinion is you should run a wide stop. You should allow price to do whatever it's going to do. And the thesis as well, over the next, 20, 30 minutes, 40 minutes, we are going to head lower before we come all the way back up higher. But if I'm going to take a breakout style, even on ES like that, I got to get a little tighter with stop, a little bit heavier on size, and just not have to catch a larger movement, right? The thesis is I'm catching the next leg down from the breakout. So, winning trade, again, not going to be mad about that. 576, probably around 576 on the day across these 3 accounts so far. Let's see. Let's see. We'll see how this one was handled. So far, didn't go and hit that 660. Wouldn't be too happy on this pullback, but this is still weak. Trending to the downside, you know, overall, looking for a second setup. I'd look to take something pretty similar. Now, if we got close to a level like this and we had room for a breakout to the downside, I would take a second trade. But this isn't something that I would want to trade like this. Let's say we turn to the downside because, you know, that's my target, right? Sure, we could blast lower, but that's not a good setup. This is still here. Yeah, 5660, still here. We don't have a massive amount down there. It's getting overlapped by that algorithmic BS, but I think we might want to go check this area out, come back up to the 80s before we potentially continue lower, maybe even higher. So let's watch how this develops. But we got to win. You know, no complaints. Not, again, that one just should have been a nice, you know, like $200, $225 because my stop loss should have been in a better spot, which means I could have been sized heavier and could have captured more profit on less of a move, right? I don't care about what price does, you know, like in the next 3 hours, right? That's not my goal, is to capture the whole move. It's to capture a small piece of the move and to do it in a way that makes sense. And to me, it makes sense to have an invalidation point at a very clear level where what is the thesis of your trade? What are you anticipating happening based on your reaction to historical price action, right? Because we're not predicting trades. But what are we anticipating happening? What's the trade thesis, okay? Put your stop loss in a spot where if that doesn't happen, you're out of the trade. So mine could have been tighter on that one. Long way to say that. Yeah. Done for the day, boys. Good morning. What's going on, guys? What's going on? I thought your scalping video was really interesting. Yeah, guys, if you're on here, I got a video out. I'll be putting a bunch of long form videos out where I went through back testing a really aggressively scalping NQ. It's somewhat similar to what I've been doing behind the scenes. Been paying pretty nice, but just an idea around aggressively scalping with a negative risk to reward on low time frames, utilizing primarily volume profile and just basic price action. It's the opposite of what they tell you to do. Worked out very well in the back test. Worked out very well across prop accounts. I'm still testing it, and I'll continue to make videos on it. But yeah, cool to keep an open mind to other styles of trading. I'm working on not scalping and holding larger moves. Yeah, so it was really cool to see. Absolutely. It's about finding what works for you, right? And you know, like I don't think there's one right way to trade, right? I don't think there's one right or wrong way to trade. And other people do. And I get that a lot. And it's usually the people I think that are just early on in their journey, or they're so deep rooted in some, you know, in some format, like really usually the ICT smart money guys. Again, like, no disrespect. I don't have any beef with you. Do your thing. Personally, I think it's way overcomplicated. But I get stuff like this, right? This, you know, I posted that video, or posted something on that video, and some dude said, like, none of that shit matters. That was the comment. None of all that's BS. None of that matters, essentially. I said, okay, well, what does matter? And it's like all caps, buy side, sell side, inefficiencies, above and below price. Okay, like, that matters to you, brother. That matters to you. That doesn't matter to me, right? And you could say that doesn't matter to me, volume profile and, you know, VWAP. But we got guys making money, if you just open your eyes, trading all different types of stuff, right? All over the place. Different, no indicators, order flow, no order flow, volume, no volume, you know, everything in between, right? So that would tell me, objectively, there's more than one way to make money, right? And what matters is all that matters to you and how you use that for pattern recognition. It's the way that I think about it. You know, I have opinions on things, indicators being lagging, stuff like that. But, you know, in response to your comment is where I'm ranting on this. It's more than one way to do this, man. Different styles, different strokes for different folks. My suggestion, find things that speak to you personally. Stop Googling what's the best. There is no best. It's just what's best for you, right? Find the stuff that's best for you. And then lean into that, despite what everybody else on social media or, you know, the retail space is going to tell you, right? You can probably make whatever works best for you work. That's my thought. Find the stuff that gives you the least resistance, the way that you want to interpret the market. And for me, especially in futures, I'm scratching this never-ending itch to try to leverage these small movements in NQ. It's very aggressive. It's fast-paced. There's certainly drawbacks to it, but I'm going to experiment. Do I know if there's an edge there for me over a long period of time, over a large sample size? I couldn't tell you right now. I don't have a large enough sample size. But I'm going to tell you what's working and what's not working. I'll show you it, through videos, through backtesting, through results, and we'll go from there. But yeah, it's just funny to see in the space. None of that matters. This is what matters. Draw on liquidity. The 930 macro. I'm like, all right, bro. Okay, cool. Anyway, good trade, Zach. Also, if you could recommend one thing, that would be to read your comments more often and interact with your viewers. Absolutely, man. I will read my comments more often and interact with my viewers. If you mean here in chat, I absolutely will. When I'm locked in on a trade, I won't so much. I really focus because I feel like I chat with you guys a lot and I get easily distracted. Like right now, I'm just chatting with you guys. But yeah, good suggestion, man. I will always do that. As far as what I do on my comments across socials and in Discord, I talk all day. I spend all day talking to everybody. I answer every single comment. I spend way too much time. So I hope you don't mean somewhere else besides right here. But yeah, brother. Absolutely. Blood in the Streets made 435 on that short. Nice. Nice. Joey Adams making money in the 50K scalping combine. Awesome, man. What's up, man? I know you were sending me some stuff on X. You were working on some scalping approach as well, man. Cool to see. Cool to see. What matters most to me is closing my eyes, pick a side, and YOLO all the way. There we go. Wolf with the classic, the 9:37.26 a.m. macro is far more accurate in my humble opinion. I don't know if you're trolling or not, but that's totally cool if you're not. I don't know what that stuff means anyway. Just times to look at, I think, can be important. Time as an indicator, can be important for sure. So, if that's your thing, that's cool. But my thought is, when guys say, something doesn't matter to somebody or there's one way to do stuff, I just think that's a bunch of BS, man. If you want to talk about market mechanics, like if you want to talk about different narratives and, like the correct way to speak about liquidity, because like what are we defining as liquidity, or, the way that the, market functions as an auction or things like this, what algos are actually present. Sure, there's kind of black and whites, there's right and wrongs. But as far as like how to make money through pattern recognition in technical analysis, which is what most of us do, whatever helps you, man, like whatever works for you specifically. I'll show you what works for me. I'll show you what doesn't work for me, things that I don't like. But I think having that kind of open-mindedness is just the proper way to go about it. And when you yell at people with all caps and say, that none of that matters, that's all BS. Well, matters to who, bro? Just here, all love, no hate. I think it brings more comments. For sure, Ryan. Ryan says, just love, all hate. All love, no hate. My bad, Ryan. I think it also brings more people to the chat and comments, interactions, more subs long term. For sure. For sure. I also leave subscriber mode on for 2 hours, Ryan. So that does limit people that just come in and troll, because I had a whole bunch of trolls that seemed to love me. Specifically 1 or 2 guys that continually just jumped back in with 1,000 profiles. So that does limit it. But yeah, I feel you, bro. It's a good recommendation. If you take regular payouts, you are doing something right in your trading. I'd agree with that, man. Again, I think there's a stigma and everybody has a chip on their shoulder and wants to be right? Wants to tell people right and wrong ways to do stuff. Are you getting paid? Are you able to turn a profit consistently? Cool. Well, answer to your data, right? Answer to that. Does it tell you that you should be scalping and looking at, short time frame trades? You could make something work. Great. Do that. Should you be looking for longer holds? Like I kind of went down that journey a little bit, earlier this year was kind of looking for these longer time frame moves, just trying to stay out of the, Trump market volatility, and worked to a degree, but just do what's working for you. Everybody has like so much fear about being wrong or doing something that's different. Are you making money or losing money? That's what matters here, man. And it's going to be different for me than it is for you. That's a fact. We're different people. We interpret things differently. So, and again, I think it's why that you can go across, there's probably 20 people live trading right now. And if you hopped on to everybody's live stream, you would see a different chart, right? And I'm not saying everybody is going to make money. I'm not saying all 20 of those people are making money, but I think a lot of them are, and they're using different stuff. They're all using different stuff, man. So there's no best. Just what works best for you. I think I like other people's perspectives, right? I constantly listen to different guys. We have guys in the chat that, are, and in Discord that talk about different levels and things that are really interesting, that I pay attention to. I'll gladly take something else from somebody else's trading. None of this stuff on my chart is proprietary. I didn't invent all of this. All this other talk about inventing something, Maverick, I agree with you. I have zero clue about ICT stuff. Yeah, me too. I mean, only from what I see from the outside, right, and spoken about. I didn't take time to study it, so you could say I don't know what I'm talking about either. That's fine. I just take 3 to 5 point scalps on NQ, preferably under 10-second trades. Not so sophisticated, I guess, but getting paid. Hell yeah, dude. Listen, the simpler the better. Not sophisticated is good, in my humble opinion. As stupidly simple as you can make your trading, right? That's like, look at that trade that I took. What was sophisticated or so intellectual about that? Really, like, I don't consider myself the smartest guy in the room. And that's not a super smart trade. I don't think it helps to try to take a super smart trade. Here's what went into that. Let me just get rid of this, right? Looking at where we are on the daily first, right? A little bit of higher time frame analysis. But really what went into that is, okay, let the market open up. We open up to the downside. We're below VWAP. We're low in the session range. We're cracking overnight low. We break and retest value area low, another, level, right? This happens to be an objective level. We sell off, consolidate, break and retest, very simple. And I take a breakout to the downside. I don't know, price is moving down and I think it's going to move lower. And I have a way to structure risk right here. Like, dumb guy trade is the best for me, man. Keep it simple. You overcomplicate stuff, it becomes a nightmare, a real nightmare. So that's my 2 cents. I agree with you, man. And awesome. You find something that's working for you. That's great. Try to make something that's somewhat consistent. Like I trade very discretionary here. You will see the way that I take trades, the entries, the stop loss placement. There is a lot of discretion, which I think I'm a fan of. Again, that's a hot button issue. But find some consistency, some way to repeat what you're doing on the chart, because the market is very inconsistent, especially when it comes to risk management and how you're going to manage risk. And let the odds play out in your favor. Journal, find what's working, do a little bit more of that. Find what's not working, do a little bit less of that. That's the thought process. That's my thought process. So, Wolf says, from all my years, about 3. People talk a lot about win percent and risk to reward. To me, sound more intellectual. Bottom line is keep your winners bigger than your losers. Be consistent. Stick to your rules. You'll eventually find profitability. Consistently, don't lose your crap over 1 to 2 trades. For sure. The only thing I'd say is, Wolf, you and again, this is kind of a new. I'm watching price move down here. Hang on 1 second, guys. Trying to follow Ryan's suggestion here and interact with the chat more. Until we get the trolls back in, and I'm just banning people left and right. Ban hammer. So I'm watching the 660 again. Not the triple the amount of orders that were on it before. Maybe closer to double. But we got now quite a bit down at 650s. If we continue lower, this thing looks like we might just slowly grind to the downside. We've really found some buyers right in the middle of this zone, this area of high volume from the higher time frames. So I'm cautious. I don't really want to look short. We have, if we compare this momentum, these measured moves, we started to dry up, right? We kind of have volume dying down. We didn't pull back up and then really sell right back off. We've kind of started to come over to the right. So for those reasons, I'm sitting patient. I'd like another trade on this. Like I talk about, I want to have, larger winning days in general. We have some liquidity right down here, and then right at prior day low. I'd kind of be surprised if we didn't go and tag that. But we are at an area of high volume right here, and we've kind of hung out for a while. Sellers are just failing to really run this low. So I'm not going to look for it short right out of this zone. Had we formed something a little bit different here, right? Like had we just like pulled up really aggressively, maybe swept these highs and just wicked and then really aggressively came back in like on the way down, maybe I'd look for something, you know, again, using my discretion, using my intuition, utilizing price action and market structure. That would look like maybe, you know, stop run to the upside and really aggressively coming back through this zone. I might look for it to the downside. But right here, right now, I don't like it just out of this consolidation to the downside. Not looking long. I think we could certainly pull back up aggressively on this. I'm not taking a long play out of here. You know, again, like I said, maybe if we started to find, if you go back, this is exactly what I was saying. If we started to find buyers and form some structure to the upside, you know, again, kind of a new short time frame trend forming, I would look for it out of that level, maybe. But I'm just going to wait to see what happens here. So, but yeah, back to the chat. Yeah, the only thing I was going to comment on that, Wolf, is that win rate and risk to reward matters. You know, I don't think you have to talk about it in this crazy intellectual way, but that's kind of some basic metrics. The only thing I'd say there is there's a combination. I'll be even more like flexible than what you said, right? If you keep your winners bigger than your losers, that's great. You don't need a positive risk to win rate, excuse me. But you can be profitable with your losers being larger than your winners, which is what I was displaying in that negative risk to reward scalping strategy. And again, the big point about that is not to make an argument to do that or to say that's the way to make trading work for you. Just kind of display that like so much different stuff can work. And we have like, I post that stuff. I get so many comments, dude. So many. You'll never, you're going to blow up with less than a 1-to-1 or just add a 1-to-1. Your winners need to be twice as big as your losers. They don't. They really don't, What is your win rate? And that's going to tell you how big your winners, what your risk to reward has to be, or your average win-loss ratio. Your average losing trade versus your average winning trade. So it can all work, man. It can all work. There's obvious math behind it that you have to have a win rate that supports your risk to reward or vice versa. You have to have a way to control risk in a somewhat consistent way and a way to apply some consistency to your trading if you want consistent results. If you're all over the map, completely inconsistent, you're certainly not going to generate consistent results. Like these are just kind of obvious things. But past all of that, man, it's really an open game. I mean, we have ultimate flexibility here, which can be a bad thing. But I would encourage you, especially if you're early on in your journey, 1 year maybe, under a year, just into your second year, explore, man. Explore stuff that works for you. Don't strategy hop. Don't search for the Holy Grail. There is none. Be the first guy to tell you. There's no Holy Grail. If you find it, please let me know. And everybody else that trades, so we could all just kind of stop working so hard in the stuff that matters to get an edge around a Holy Grail. Yes, long term, not on individual trades for sure. Yeah, Tom Hogarth says there's a millionaire who has a win rate less than 25%. Yeah, absolutely. I can't remember if is it Hogarth Wolf that tells that story about the guys that went to like South Africa or like New Zealand or Australia, and they were trading something that had this. It was the opposite. It was like an abysmal win rate. It was a horrible win rate, like what you're describing there, and a massive risk to reward, like a 10 or 20-to-1 or something like that. I think it was like two guys, and one of them tells a story. I can't remember if it's Tom Hogarth or Mark Douglas that tells that one. But that's the demonstration, right? That's a demonstration. You can make money with an abysmal win rate, right? You can make money with an abysmal risk to reward, but the other metric just has to support it. And again, it's kind of that demonstration that like there's no one right or wrong way to do this. I think in the retail world, so many people focus on win rate. I've had high win rate. Like we got to have a high win rate. You don't. You don't. You can make money with if I remember correctly. Yeah, we're thinking about the same thing. You really don't have to have a high win rate. That's the example right there. Here, I'll look it up. We can talk about it real quick. Um, let's see if I could find it real quick. While I'm watching price just consolidate down here, really not much. Really not much going on. Yeah, that's the basic summary. It was from Tom Hogard. You are correct, Wolf. It was from Hogard, and the example is that these dudes had a only a 10 to 20% win rate. They were only winning 10 to 20% of the trade, so 1 to 2 out of every trade. But they had a super high risk to reward, which was like 10 to 1 or 20 to 1. They also traded it on a super low time frame for like the level that they were trading at, which was also wild. But the point of it is that, being right all the time in trading doesn't always get you paid. They were wrong almost all the time, like 90% of the time. But they had wild mental resilience to trade that system, which I would say would be almost impossible for any human. And they came out very, very green. Very, very green doing that. So again, there's an example of something that is, it's really, outside of the norm, outside of convention. To me, what I've made a lot of content on, this is kind of just, building off this, is a lot of guys do mental tax on that would be tough. There you go. So market doesn't behave the same way every single day. You got to be flexible a little bit. Absolutely. That's where discretion comes in. So yeah, but I don't know how to pronounce your name, brother. That's a wild one. But to talk about that, right? And this is kind of what I've made a lot of videos on, and I talk to a lot of guys that I work with on. A lot of what we learn early on is shoot for a high risk to reward. Have a 2 or 3 to 1 risk to reward on average, right? Try to make your try to make your winners twice as big as your losers. And in theory, that sounds good, right? Well, I only have to be right a third of the time and I can break even. In theory, that sounds good. But what happens, and that's an extreme example that we're just talking about, what happens is you end up with a really low win rate and you end up with a lot of losses, a lot of losing streaks, and it becomes very difficult to build confidence in that strategy. It becomes very difficult to actually see yourself through to the other side and to manage risk, withstand all of that drawdown and those losing streaks because you have a high win rate, because you have a high risk to reward, low win rate. And where I see a lot of guys do better, and including myself, is to lower that risk to reward. Not exactly what I just did on that last trade where I don't want to be, I really don't want to be grabbing a decent profit relative to the risk that I'm putting on. But come back off of that multiples of your R and maybe closer to that 1 to 1, 1.5 to 1, slightly positive or right around that 1 to 1, and allow your win rate to really increase to surpass the 50% and take a lot of winners, take winning streaks, build confidence in your system, right? And here's kind of the thought. And when I work with guys on trade management, I talk a lot about this. Your data is going to show you what's right and wrong, right? Your data is going to tell you how long to hold on to trades. Everybody's system is going to be different. Everybody's approach is going to be different. Finding some buyers out of this area. But there's also a question of what you can reasonably trade based on your mindset and your psychology, right? So a lot of guys in their data say, man, if I hold on to my trades much longer, I would take full stop outs and I would have a lower win rate, But in the long run, I would make more money because I would catch a couple big bangers, right? And my P&L would be more green. But the question is, will you ever be able to survive that? Will you ever be able to pay that mental tax to be able to go losing day after losing day, taking stop outs on trades that move in profit and then all the way back to stop you out in the pursuit of those bangers? Or is it just an unreasonable system? And that's where I find a lot of guys find themselves, right? They develop an edge. They have a system that works, but it's nearly impossible to trade from a mindset perspective because it's a low win rate, high risk to reward strategy. And it means you're going to have to show up every day and take a lot of losses. You're going to have to be wrong and take L's more than you take winners. And, a lot of guys just can't handle that, or at least to the extreme that they operate, they can't handle that, So I've talked a lot more about that. Back off your win rate a little, back off your risk to reward. Excuse me. I'm going to try to stop confusing those. Be more accurate. Lower that risk to reward a little bit if you're struggling in this area. Maybe you're not. Your win rate will increase. You'll take more winners. You'll have more winning streaks, more green days, and you might actually be able to trade the way that you're supposed to trade. So that's my thought process there. Yeah, you have to think about, of course, what's the data say? What's the system say? But what can you actually execute? What can you actually trade? Can you show up every day with a 10% win rate? I probably couldn't. I don't think I could. Even if it was extremely profitable in the long run, you would lose just, batches of 20 trades in a row. The risk management would have to be insane, and it'd be a nightmare. It'd be a real nightmare to trade that. So yeah, idea of detaching from outcomes of the trades. Yeah, low win rate would be taxing regardless. Yeah, would be taxing regardless of risk. Absolutely. You even if you're super low risk, you would be, it'd be tough. So again, we're humans, right? The really negative risk to reward, high win rate makes you feel good all the time, but maybe that doesn't make sense for most guys. A really negative win rate, especially because, you take a couple losses and maybe it's, really aggressively eating into your profit. But going the complete opposite way, you're going to end up with a low win rate, man. You're going to end up with a really low win rate. And, a lot of profitable traders have that. But you got to understand those metrics just a little bit, right? Not to sound smart or anything or focus too much on it. And understand what you're going to have to sustain, day to day. So that's my thought process on that. That's the big conversation. But it's a good conversation. Again, to wrap it up, no right or wrong way to do it. You're going to find out, for yourself where you find the most pain, and you're going to have to cater to that a little bit. You are going to have to beat that devil on your shoulder. But, what type of person are you? Are you somebody that cannot stand to watch the market run in your direction after you close out a trade? Probably going to want to hold on to winners longer. Are you somebody that can't stand to get stopped out after moving into profit? Maybe you're going to go for that, tighter risk to reward and just go for these scalping moves. Also just what is your perception of the market? What moves are you able to react to in a way that's actually effective, So yeah, man, consolidating down around the zone. You guys saw where this zone came from. It ended up really coming into play. Nothing magical here. I'm just going to demonstrate, why I like volume profile, right? If I didn't have this on my chart, would I have put a zone there? Probably. I'd probably have it a little bit lower, which would also make a little bit more sense. Probably would have been better placed. Maybe down around this low and this area of consolidation, and then just looking left, this area that's been tested as, support and resistance multiple times before impulsive moves. It's not super clean, right? It's not just, next lows in the downtrend, but I had prior day low down here. And if we're going to find some buyers, if we're going to find some support in between value area low, which was my next level, and prior day low, which is, 42.5 points away, I probably want to have something on my chart here when I'm zoomed in. Here's the zone. And what really gave me the indication to put a zone there, and what I've been leaning more and more and more on, volume profile. This is visible range volume profile. I'll show you guys my settings for this. And this was in the video that I was using that I just made. You guys can check that out. I got row size increased. I don't know that it changes if you just keep going up, but I think it starts really low. It just makes the rows a lot bigger. I'll show you if I put 25, for example. Just kind of has these really, really big blocky blocky rows. I like it really, you know, zoomed out and kind of granular. I think I might have had like 72 for a while. That was an interesting one. I've got it moved over a little bit. If you increase this width, it brings it all the way over your chart. You know, really will kind of overlay price, and I don't like that. I kind of want it over to the side. A little bit different colors on the setup itself. You could, like, you know, go back and pause this if you want, for value area high and low and volume up and down. Point of control, it's this color right here, a little bit lighter. But what this is showing you, it's a horizontally displayed volume, right? It's calculating volume based on the visible range, hence the name. So as I move in and out, you can see, you know, it's calculating more information here as you zoom in and out. So we call this kind of temporary volume point of control. Temporary meaning, you know, depending on what I'm displaying, and as more price is printing, that's going to move. But this is going to show you, if you're not going to see it right off the bat in price, to a degree, where high volume areas are. And what we often see, forget about the theory, forget about, you know, the actual market mechanics behind why this may happen. I'm going to go the dumb guy route. What I notice, like an idiot, watching this play out day over day, is oftentimes price likes to return to these areas of high volume. And when we get there, that might be a key level to pay attention to. What I also notice is when we move out past these levels, after maybe consolidating, breaking, retesting, we move quickly through areas of low volume, right? So if I'm going to place a higher time frame zone, I might want to pay attention to a high volume area on my chart. Using it the same way in that video that you saw, really zoomed in, scalping on the 1 minute chart. I'm using the same idea, right? And, you know, here we go. Here's the thesis right here. Just viewing this 1 minute chart with this little bit of data right here. We start to come out of this area of high volume that you can see from the consolidation. We transacted a whole bunch right here. I think we're likely to start to crack a lot higher. Where's the next area that we might find some sellers if we don't just kind of dip our toe up here and then come right back in, is up here, or even better, all the way up here. You know, this last area of consolidation. So again, they line up traditionally with support and resistance zones, right? They line up with market structure and price action, you know, to a degree, but helpful. I'm a big fan of volume. I didn't have it when I was in the Forex market, and I try to be really self-aware. That's probably why I like it so much. That's probably why you see everything on my chart has to do with volume, almost everything. I didn't have it, and now I'm like a little kid. I'm like, oh, I get volume, you know, reliable volume data. Like, wow, all these, you know, all this information that I didn't have before that I can use. It's new to me. I wasn't able to have this. So, you know, you can grain of salt that, find what works for you. Outside of that, order flow on the side, Bookmap. Mike Z, what's up? Finally made a stream. Good morning, brother. Good morning. We took a W, and now I'm just yapping about win rate, risk to reward, different strategies. That was a little bit volume profile. If you guys have any questions, again, Ryan, good suggestion. If you guys have any questions, feel free to ask in the chat. If you have trading questions about my chart, just, you know, if you ask me something stupid, I'm going to ignore it and just kick you. But outside of that, trading, you know, trading related questions, technical analysis, you know, all that stuff is welcome. Personally know someone who is a trading millionaire with a 40% win rate. His risk to reward is like 5 to 6. One win wipes out any of his losses. I can't mentally hold a trade that long. Lol. Me too. My XFAs with micros locked out. Hell yeah, man. Catch me trading micros every day. I don't have an ego. I'm copy trading multiple accounts, but I am trading micros. You know, I don't have an ego. I don't think anybody needs to. I see those comments all the time. Yeah, bro, but you know, who wants to tune into your stream trading, you know, 3 micros? Okay, bro. You know, go trade 3 minis in this volatility. Have fun with that. Maybe you're trading a huge account. That's awesome. You know, good for you. Nice. Traded more with my practice and blew up chasing. Yeah, Mike. I think you got an interesting tactic there of swapping to your practice account to just go and you know, blow up or do, you know, silly moves, and that's not a bad thing to do. I think if you do it enough, you'll probably lose the desire to do that. You know, you'll just be able to watch the market and say there's nothing here for me. But if you have to, you know, just go do it in a practice account, do it in a demo account. Nothing wrong with that. Again, guys, I know I'm talking a lot here and not, getting a trade on. There's really nothing for me. Like I talked about down in this zone, really did not have anything continuing to the downside. Just like I anticipated, if we start to come above this, I think we could either dip a toe, just kind of get a little wick above, and then come right back down in. That would actually make sense first before continuation to the upside. But we have potential to move back through this all the way up to VWAP. That's starting to line up with this value area, low area, break and retest area for this session. I could definitely see a recovery. Not a magical level here. You saw how I found this, but we are finding buyers here. We came down to it, consolidated, and we've been going sideways for almost an hour, 47 minutes. So I don't have a setup. I'm not going to get long out of this zone. If you were going to get long today down here, personally, sure, you could take a breakout right through this level, but I think a stop loss would have to go way down below this area. I think we could easily pull back in here as we start to break out before continuing. That could be a potential, like I talked about, if we start to form some structure to the upside. Could look for a breakout, after some structure forms with a way to get an invalidation point that makes sense. But I'm probably not going to get a long out of this. It's probably either going to run or just kind of chop and then run. But if we had a nice deep pullback in here and then continued to come and break above, I would look to take it. If we get this just kind of double bottom action, which is not bad, you could take it from up here. But my humble opinion, where's a stop loss placement that makes sense? All the way down below session lows. All the way down below session lows. So, which could be a play, right? We could recover. Definitely could come back up at least to this area right here, right? Looking at volume profile, just zoomed out on the 1 minute. Easily could see that happen. That could provide a nice positive risk structure, right? Maybe you're targeting, the overnight low, kind of lows of this pre-market session. Could grab 95 ticks of profit for 75 ticks of risk. Even better as we're kind of pulling back in. But just really counter and wide stop loss, wide take profit. Not exactly what I want to look for. So just want to see, again, I think if I was going to get a setup on this, it would be it'd be a pullback into this zone and then an aggressive buying pressure coming back out. And then I would look to take it to the upside, anticipating a breakout. And like I said, stop loss a little bit tighter as I was kind of, critiquing that first trade that I took. If the thesis is going to be a breakout, take it with a breakout, validation point that makes sense. It doesn't have to be super wide. So something along those lines, I would look for it. My entry would probably be somewhere like that. Something along these lines. Grab a nice quick move to the upside, but I'm not sold on that yet either. But I'm going to watch for a little bit longer with you guys. Good conversations today after taking a win. Small win. Grabbed it quick. Happy where I did, right? This didn't provide, this didn't move all the way down to the 660. We did not get continuation to the downside. This would be in drawdown, right? This would be back past my entry at this point, and I would have sat in the trade for 45 minutes. So, I'm happy that I got out of that one when I did. Now, do we continue lower? Maybe, but that's definitely not my trade thesis. I don't want to be sitting in these types of small, 10, 12 point, 15 point stop loss trades for, hours. That's not the goal here. So let's see as we start to pull back down. But again, you guys got questions? Feel free, ask away. MNQ was very skippy today. I agree. It's been easy to lock out recently. Hell yeah. I want to keep my XFA. Yeah. Here's how to keep it, right? Here's my 2 cents before I read the next comments. Set a risk structure that allows you a lot of losses, right? Decide on what that risk per trade is and what that risk per day is. And then use the lockout feature. Go ahead and use this lockout feature. Set it in settings to lock you out and liquidate. And then every day, reset it so you can't go back in and change it when you're on tilt. No excuse not to do that, guys. If you're struggling, Topstep X, Project X has an awesome way to, it's like a cheat code to keep you from blowing up. Really does. Set that. And outside of going through a outside of going through a gnarly losing streak, you know, you're going to hold on to that. I like the less stress of micros. I would love to pack a 2K day, but I know micros is away from me for now, for sure. Used to be a guy in the Discord community. He's one who showed me the beauty of micros. Since then, I only traded micros. Micros FTW, hell yeah. Hey Zach, I was watching your negative risk reward last night. My wife came in and was like, "Who's that?" May have to stream you more. I can watch more vids on the big TV. That's funny. That's funny, Mike. Yeah, good. You get the approval to run it from the couch. That's funny. Yeah, man. I'm glad you guys liked that video. I'll be doing more on it. Again, it was kind of just a peek into just the thought process and kind of what negative risk reward scalping looks like for me on NQ. If you guys are interested in that last video that I just posted yesterday, you can check that out. But yeah, man, good to hear you're in the XFA. Good to hear you're holding on to that. Use those risk settings. You know, give yourself a lot of room to work. Keep it small. Keep it slow and low, and you know, get something that works really small. And here's my 2 cents. Leverage copy trading. You know, here's a thought. Don't look to just amplify your massive wins copy trading and take on massive risk. Utilize it as a way to keep risk stupidly low, the way that I do, and then let the copy trading do the heavy lifting. That's my reframed thought process for this year. I am copy trading across Topstep. I have 5 XFAs. I'm waiting for a payout in 1. I don't know that I'll copy trade all 5 at the same time. I don't mind breaking it up a little bit. But I'm also copy trading 5 Tradeify accounts if I can ever get the copy trader to work and Tradeivate and myself to work well with it. And these small wins can be amplified, and it allows you a boatload of room to work. You know, you have $2,000 in drawdown with these 50K accounts. If you're only risking, you know, $100, $200 per trade, and you're making $100, $200 per trade, copy trade that. 5, 10 accounts. Before you know it, you're putting up, you know, just like you said there, your 2K a day. Meanwhile, you're trading 2 micros, 1 micro. You know, I watch a dude that trades 1 micro, 1 NQ, 1 MNQ, which is a little more volatile. Copy trades, and is regular putting up like massive days. Massive days. So. Hey Zach, no, sorry, I read that one. Similar to how you trade, except come back. I come to break even quick and scale in and out. Yeah, sure. Pile up a ton of base hits and gets paid. For sure, for sure. Video was good. Only thing seemed like Zach was late for an appointment. Wanted to put everything out before that. Wolf, I don't know, man. I don't know. You're really towing the line of a troll here. Mango Stardust, how long do you think you'll be able to copy trade on Topstep before they call you up to a live account? It's a good question. So they just revamped all of their rules for when you get called up to a live account. And one of them is how frequently you take a payout, regardless of how much you, whatever size payout you take, because I'm a big fan of small payouts. So they've got a clearer path. It used to be just kind of different, right? I think they looked at your trading and they decided whether or not they wanted to take you to live, and a lot of it had to do with putting up big balances. But there was guys getting moved to live with really small balances, like a couple grand, and it just depended, I think, on whether or not they wanted to put money behind your trades. Now, or they thought they were able to, right? Because if you think about how a risk desk functions, again, I'm speculating, I don't know. But now they have a clearer path to live, where essentially, I think I'd have to read the email. Let me actually read it so we can talk about it on here. I think it was, if you take 5 payouts from any one account, after activating any new account, which I'm going to fall into, you get moved to live. So that's kind of a concern. Let me see if I could pull this up exactly. Express funded account. Yeah, I want to get the actual answer on this. Kind of the parameters to get moved to live. So, here's kind of how it goes. Maxed out one express funded account. Yeah, I'm not going to comment on it, but I would read right up on it, man, because I don't want to give you. There's like 100 different, not 100, but there's maybe 8 or 10 different scenarios, and then there's a boatload of question and answers of kind of how this works. Again, I'll just kind of comment on like my thought process. And there's different thought processes, right? I just watched the new podcast with two guys that I really respect that are great traders. I put them both well above me. Go check out Austin Silver's The Day Trading Show. I got a podcast on there with him. But essentially, the conversation was about not taking a payout. And a lot of guys go that route where the thought process is you want to build up a big balance, maybe take a small payout or not at all, and aim to get moved to a live account. Payouts are going to eat into your buffer and all that type of stuff. My thought process on kind of the starting point where most guys are, work on getting funded, right? And then if you get funded, congratulations, you've done really well. And then if you become eligible for a payout, whether it's Topstep or Tradeify or somebody else, in my humble opinion, although it will put you in a tighter spot from a risk perspective, my thought process is, and what I prefer to do is, take a payout. Even if it's a small payout, pay yourself, recoup your investment, create a positive return on investment, make that a risk-free account, and then continue from there. Why? Because I've watched more guys than I can count, almost everybody that's made it to a funded account and made profit, run an account up into profit and then run it all the way back down into the ground, or lose significantly more than they ended up withdrawing. After you take a payout or maybe multiple payouts from different accounts or just as you progress, you may want to continue longer without taking a payout. You may want to build that balance up, not put yourself in a tight situation on drawdown and buffer, and aim for larger payouts. But that's my thought process. So this does put traders that do that, like me, in an interesting spot where that may mean you lose your multiple XFAs, ability to copy trade, and maybe if you have accounts passed on backup, which I do, that you get moved to live with a small balance, maybe, which isn't really ideal, just in my humble opinion. Of course, there's a big benefit to be moving live, all the things that come with it, but there's a drawback there. So. My thought process is kind of look at your trading. First, just work on, getting to payouts, multiple. Get to a spot where you can take small payouts, any size, man. Pay yourself. You get into an account for a couple $100, take a couple $100 out, double what you put in. Great return on investment. Congratulations. Pat yourself on the back. And then build from there, scale from there, reinvest, go from there. So that's the thought process for me. I've watched way too many guys run up accounts and not take a payout. That's to think that, traders that are early on in their journey should be trying to run up accounts to take, $5,000 or $2,000 payouts. Just forget about it. Yes, 5 payouts. MP said that if you are trading really well, they may still move you live. Yeah, they still have discretion. They can move you live whenever, but now they have a clear path where they kick your ass to live. Price loves your rectangle today. Yeah, magic rectangle, guys. Not magic at all. You saw where it came from. I agree. Quinn, what's up, brother? Do you think copy trading with low risk is the way to go? Yes. I believe it is an insane advantage, and you can think of it objectively, of copy trading multiple accounts with low risk, right? If we got a little bit of volatility to the upside out of my rectangle. Failing to break this low, I think if we come back above this high, I know we're just yapping. I am watching the chart. I think if we come back above this high, it's really likely that we come up here to just come back to this next area of high volume, if not all the way up here. We can certainly break lower, but this is a hell of a lot of consolidation and chop, man. And I'm glad I didn't take a second trade. It's why I'm just kicking back on here, talking with you guys. Well, I wanted to watch for it. I don't know that we're going to get it. I'd want to see some structure to the upside, some structure to the downside before I jump into anything. But this is a nightmare. But to answer your question, yes. So again, copy trading wasn't a thing for me in the past. Coming to futures, coming to these firms, especially as more of them added more accounts that you're able to copy trade, I initially looked at it as just a way to like increase risk and increase profit, right? Like if I was going to do some numbers in one account, well, I would just double that or quadruple that or times it by 10. But then I started to think, well, this is really tight drawdown. This isn't like a real smart thing to think, but we're working with a really tight drawdown here, right? $2,000 in a 50K, right? And it trails, end of day trailing drawdown. If I'm able to really, really reduce my risk and take on, let's say, for example, $100 to $200 per trade, I give myself a ton of losses, right? A ton of losses before I run myself into a big hole or I hit my, my max loss limit, right? But that also means I'm not making a lot of profit, right? I'm spending a lot of time in these accounts, but I'm not making a lot of profit. But I would really like to be able to withstand that many losses because we know over time, we're going to have losing streaks. We're going to be out of sync with the market. We're going to suck at trading, or it's just going to be our natural losing streak that has to do with the way the market's moving, the market conditions, our system. And if you're risking, $500 per trade to put yourself in a position to make $500 to $1,000 in a day on one account, you're probably going to lose it pretty quick, right? You're not going to be able to withstand that losing streak unless you have a big balance build up, all these things. So if you do lower risk, and trade really, really conservatively from a risk perspective, and you copy trade, you allow the copy trading to do the heavy lifting for you and leverage that by 5 or by 10. In my case, I'm copy trading 5 with Topstep and 5 with Tradeify. Or maybe you go even past that. Apex, Route, or all of the other prop forms is a ton. And that's where I've seen a lot of guys do really well. Sure, there's the whole conversation where it's like, it's sim trading, it's not real trading, that's not going to work in live environments, whatever, bro, whatever the argument that you want to make is. Here's my thought process. I'm thinking from a risk perspective. What is my risk per trade, risk per day relative to the account size? And for these 50K accounts, you're working with a $2,000 account, and it's even worse than a regular $2,000 account because the drawdown trails with you, right? The max loss limit trails. So in order to really hold on to that, if that's your goal and not just kind of churn and burn accounts, you got to size small. You have to allow yourself room to work or you're just not going to last. So where I was much more aggressive individually in each account and I was much more comfortable just kind of running through them a little bit, I really backed off risk, copy traded. I still run the risk of losing accounts because I do take payouts quickly. And I do have accounts on backup for that reason, and I'm ready to reinvest, right, in more accounts. But I hold on to them for a lot longer, and I work my way, to small profit in each individual account and small profit in each individual account for small payouts. Excuse me. But I do that across multiple accounts, working really well for me. Sure, that rug gets pulled out from underneath you when you do get moved live. Hopefully by that point, you've built up a balance and you can withstand taking on more risk. So it's kind of the same thing, but that's my thought process. Last comment. Overall, you are taking on more risk, right? Because you are copy trading across more accounts. You have more real money on the line because you spent more real money on those accounts. That's the thought. So overall, yes, you are taking on more risk. But if you think about it that way, you reduce risk individually in each account and you let the copy trading do the heavy lifting for you, you give yourself much more room to work in each individual account. I think it's a hell of an advantage. I don't know how long it's all going to be around for. I'll be honest, guys. I don't know how long copy trading like this is going to be around. And straight to funded accounts with Tradeify, if you don't want to take an evaluation and you want to just go straight to funded, check out Tradeify, use code RDF, link above. But I'm going to leverage whatever tool is available for me to make money, and share that with you guys and display how maybe you want to look at that. So that's my thought. Quitting usually better. Having more accounts is a better way to get to payout compared to just having 5 accounts that you don't copy trade and trade them individually with a little bit higher risk. Get on the 50K account, size 1, 2 MNQ. Either way, you have to win the trades, keep the account, but I think copy trading 5 accounts is the way to go because you can lower risk. Yeah. Trading accounts, you can literally make a decent limit. Yeah. Again, the thought process is still there, right? Like if you're not consistent if you don't have a positive expectancy. I'm watching this. Maybe we break to the downside. We're testing the lows of my magic rectangle today. The thought process is still there though, Quinn. Like if you're not making money, I don't really love to use, I don't love to use the word profitable because it's such a hard thing to really talk about. But if you're not able to pull a profit out of the market consistently and you just copy trade 5 accounts, you're just going to lose 5 accounts at a time. So as a beginner, I think, yes, keeping risk stupidly small in one account where you're not going to make any real money that you're so excited about to write home about, but prove concept first in demo and then with low risk. That's the way to logically do this. But then eventually moving towards, leveraging copy trading so you can keep really, risk really low makes sense. So I wouldn't just be starting out right off the rip copy trading, but, that's kind of the thought process. So down to the 60s, grabbing the liquidity that's there and starting to sell off. It did stay on the book. We have a little bit above. Yeah, this looks like 53. All right, break out to the downside, man. We are not pushing back up. Again, I don't have a trade out of this consolidation. Going to watch what happens down here. I don't know that I'm going to get something on this. Maybe we just continue to break and retest to the downside today. Just sell off. Could be it. I dislike the scaling plan for 5 $200 days. Lost my XFA trying to make $30 for my 5th day. Ugh. Yeah. They all have rules, right? They all have rules. Topstep's got the $200 days. Tradeify has the consistency rule and a minimum, amount to take a payout. My friend made a good point that he'd rather just use one account because the leverage is at the highest possible amount. $200 to have $2,000 worth of drawdown, or $300 to have $450 worth of drawdown. Just using one account, that's really high leverage. But then if you copy trade 5 accounts, the leverage goes down. Also, what you're I don't know that I fully understand what you mean by that, Quinn. The leverage goes down. So like technically speaking, they're all just individual accounts, and we are using either a native copy trader or a third-party copy trader to just mimic what we're doing in one account. So you are just multiplying whatever you spent theoretically and what your drawdown is across 5. So I don't know that I fully grasped that one, but yeah. Lone Wolf, 100% lost 10 XFAs trying to reach the $200 day. Yeah, man, I've heard so many guys do that, and I talked a little. Quinn, I'm gonna get back to your question and your comments. I talked a little bit about that. These are good conversations, man. I don't mind hanging out with you guys and talking. I put myself in a position where I was more aggressive in each XFA, where I was capping my good trades at $200 because I just didn't want to give back profit, and that worked against me. And just like that, I'm in a spot where I'm not gonna, I don't need to continue trading for $200 days. I'm payout eligible in, I think I'm not payout eligible in all of these. I'm payout eligible in 2 or 4 of these. But I'm not gonna just push it all the way to a $200 day. And I think you just kind of got to let that work out, in itself, right? Maybe if you get really close, you try to take that second one, but like we said, it can work against you. So understand those rules, try to work within them, but don't let them ruin your approach, ruin your strategy. A lot of guys right here would say, okay, $144, right? Good trade. Everything made sense. Now I got to get to 60. So I just put a trade on when I have no edge in the market with terrible risk to reward and terrible win rate because I don't even know about it, just to try to get $60. And then I lose 100, and now I'm pissed off because I was already at 144. So I'm like, well, let me just get back to 144, and there's the tilt spiral. So, that's, don't do that. Just trade your system. Understand how it's going to work within the parameters of the prop account that you're with, and then maybe adjust from there, or decide to trade with a different prop firm. What's your thoughts on straight to funded? Because I can spend around, I like straight to funded. Here's my link to Tradeify, code RDF, guys, at a whole bunch of firms. You use it at Take Profit Trader if you like them. But here is my link to straight to funded with Tradeify. You can spend $330 or around the I don't know what the mark is for the 150K account, and be directly into a funded account. here's the differences, Quinn and everybody else. Different rules, right? There's different rules for these. And you might like one better than the other, but there are different rules, right? They don't have a $200 minimum trading day rule for 5 days, but they do have a 10 minimum trading day rule, right? They have a consistency rule where Topstep doesn't have a consistency rule, right? A percent consistency rule. So, all of that is stuff to take into consideration if you are thinking about a different firm, if you're thinking about, straight to funded stuff. Does Tradeify allow feature to lock out the account? So Tradeify is it's not through Topstep, it's not through Project X, it's through Tradeivate. And I believe there are risk settings, risk parameters, but it's not the same as the lockout feature. Not the same as the lockout feature. There are third-party programs and apps that you can use to create risk settings that lock you out. But no, it's not the exact same as Topstep X, the way that you can just set your settings and lock yourself out and liquidate. Lone Wolf, rough at times. Mike Z says, closer I get to 5, I may take a few days off. Hyperfocus is bad for me. Yeah. Yeah, man. That Take profit doesn't allow many risk settings and features in Tradeivate. Okay, yeah. So it's the same. It's the same, Bill. It's going to be the same deal, right? Tradeivate's just the platform, the broker that the prop firm is utilizing. So it's going to be the same. Quinn. I mean, if you just trade and don't think about the rules and just trade normally, you'd be fine having those rules under trade. If I just wrote my system, so I'd rather trade Topstep. Sure, yeah. Again, like that's the thought process, right? You have to play by the rules. You have to work within those parameters, right? And that might mean adjusting. But my thought is like, find something that fits pretty well with your system. For example, if you're a home run hitter, if you're a low win rate, high risk to reward guy, and you win 2 out of 10 trades, but those 2 out of 10 trades are 10-1, Tradeify is probably not going to work for you because you're going to have a lot of days traded and you're not going to be within that consistency rule. You're going to have a lot of big banger days and it's going to take you outside of that. Maybe you're somebody that has, a really slow and steady process and you are really consistent and you say, I don't want to spend weeks or months in evaluations. I just want to pay the extra and go directly to a funded account. And maybe, not withstand losing, evaluations and the price is the same. But find what works for you. Again, maybe you're a super scalper and you can make an intraday trailing drawdown work on Apex. Good for you. Find something that works for you. That's my thought process. Take profit. Yeah, we talked about that. I appreciate you, man. Wolf says, I'm showing up here every day because the P&L doesn't matter. Just the process. Yeah, man. Again, listen, guys, I've been doing this stuff a while. And I'm here trading prop accounts in this really small, couple micros, couple $100 type of way, because that's the way that I find works best relative to drawdown, and the ability to copy trade, and if you're focused on the P&L, putting up this big number, you can do that, but you're probably going to put a lot of money behind your trading by failing a lot of evaluations and prop accounts on the way, right? Like we all have Instagram and Twitter and stuff. You see the guys that put up big numbers, they're spending not only thousands, but like tens of thousands or hundreds of thousands in some cases on combines and XFAs and, funded accounts. So, don't be swayed by that, right? Don't be swayed by that. If you can make it work small, you can scale from there. That's the thought process. Whether you want to scale in one account or you want to scale on copy trading, you want to move it to a live account and scale, focus on the process, focus on taking consistent profits out of the market in the long term, ending net green on your P&L. Forget about the P&L number or some arbitrary, thing that you're setting for yourself. That's the best thing that you could do. Very hard to do, easier said than done. I struggle with it myself, for sure, right? We're all here to make money. We all want to make progress. The market, don't come to the market with expectations. It's going to give you whatever it's going to give you. Today, it gave me one good setup that I liked. Outside of this, really didn't have anything. Yesterday, it gave me nothing, right? Based on, my entry, could have been a little bit more in profit, but that's what this gave me today. Don't come with expectations. It's not how this works. You take what the market gives you, be grateful, move on to the next day, preserve capital, let the odds play out in your favor. So, My personal Tradeify has several more risk feature options. Ooh, Bill. Yeah, I don't know enough about Tradeify. So we were talking about risk settings on Tradeify, and Bill says his personal Tradeify his live account has more risk features and options. So maybe it does have to do with, so it certainly does have to do with the firm itself. So yeah, I don't know. I don't know what Tradeify is going to allow in comparison to that. Yeah. They make bank offer referrals too. Some guys make many K per day just from us. It's okay. It's business. Yeah. It's part of it, man. Part of it. Wouldn't mind Zach benefiting from my purchase. Yeah, man. We're more than happy. If you guys want to use my code, use my link. I stand to make money from that. I'm transparent about it. I say it at the beginning, at the end. I think it's implied, but there's also a disclaimer down there that goes into detail on it. Yeah, I think it's a very mutual beneficial way to do this. I like doing it here free on YouTube and free in a community, and try to make it work on the back end rather than try to charge you guys all, money to be in a Discord or something like that. I charge to work with guys one-on-one, but you hardly ever hear me talk about it. I just wait for advanced traders to come to me. Every once in a while, I'll throw it out there when I have space. But yeah, it's part of the business, man. Part of marketing, right? We're on here. My goal is to create multiple streams of income, the way I think that everybody should. But nothing changed from racing motocross and having sponsors and getting paid to promote or utilize their product and display it. Same thing in really any industry. That's the way I think about it. But yeah, some dudes that do huge numbers. Daily loss limit on a few more. Take profit is not present. Okay. Yeah, that's tough. That's annoying. That's annoying. I have no problem with it all. Just the flash myth misleads people into being YOLO traders, not doing all the work. Yeah, again, if I'm on here, YOLOing accounts, I'll let you know I'm YOLOing accounts, right? Sometimes I take a news trade or something, I let you know, like, this is a wild trade. I'm probably going to lose this account. I think there's a lot of guys, and more of them now are transparent. Even the guys that put up like huge numbers as they're burning through accounts, they talk about it. They talk about spending tens of thousands of dollars. They show you the big red days where they blow everything. That's okay. Whatever you're going to do, as long as you're, somewhat not somewhat, as long as you're talking about it, like telling, what's going on, I think that's good. If you want to come on and copy trade 5, Tradeify 150Ks and go full port right at the open off the bat, like, that's cool, and you're probably going to make it to really big payouts, like way bigger than I'm going to make it to, but you're also going to spend a lot on those accounts. You're going to spend a ton blowing multiple sets before you get to the one that hits. Topstep's kind of reeling that in, but that's up to the individual, right? And as I get more aggressive and more comfortable, and even copy trading, I'm sure I'll put more money behind it, within reason, so long as you don't start to get looked at by Topstep or somebody and get banned for farming. They kind of shutting the door on that. Breaking and retesting. I'm interested to see what happens here, guys. I know I've just been yapping and hanging out. I kind of wanted to watch what happened. I would have liked to take a second trade. I'm just kind of at the limit here where I don't see anything really getting ready to set up. We start to break out from this. I'm not taking it short. It's too much consolidation. It's not clean, structure to the downside. It's consolidation, break, retest, and then maybe continue lower. But with prior day low here, there is some liquidity. I don't really want to take this to the downside. So we come back up through this level, through these highs. It's not going to present a good risk structure, right? Maybe we form structure to the upside. It makes sense to take it out of this area, but I'd really need it to be coming above these highs, above this area of high volume, my magic rectangle, before we started to continue back up to VWAP. So, I don't know that I'm going to get a trade on this. So good conversations though. Fun hanging out and chatting with you guys, man. No, it's all good. I'm reading Wolf's comments. I appreciate you guys. Def moved along the world. I appreciate you guys being here. Mike, Wolf, everybody that hangs out with me on here. I really do. You know, again, if you're new, I say this often. I don't claim to be the best trader. I don't claim to be the best streamer. I don't claim to know everything about the markets, to have all the magic answers. I don't have all the biggest payouts. I'm not on the leaderboards. I'm just going to be here hanging out with you guys, showing you how and what I do for free almost every day. And if you find value in that, that's awesome. It's been awesome to build a community. It's super cool. We got like almost 1,600 people in Discord. I was looking at it earlier. All right, we need 7 people. If 7 people join, we got 1,600 people in a free Discord community, man. It's awesome. Got people sharing the good, the bad, everything in between. I'm giving out prop firm accounts. Haven't even mentioned that. Here, I'll start to end with this. I'm giving out prop firm accounts. There's a giveaway rolling on Twitter right now. No purchase necessary. All you got to do is retweet and do all the fun stuff on there. And I'm giving away prop firm accounts the end of this month to the guys who are contributing most in my Discord. It's been quiet in there, but we got guys like Wolf, who never stops talking, which is good, commenting and sharing, you know, helpful stuff, talking about the markets, talking about their trading, talking about prop firms, everything in between. So if you want a chance to win multiple, because I got multiple up for grabs, prop firms, hop in the free Discord. Link is in the description. I will also throw it in the chat. Be more than happy to have you in there. But again, man, I'm appreciative of all you guys. Appreciative of all you guys. Yeah. But on that note, I used to shop every day. Yeah, one day, Wolf, one day. But not yet. Anyway, I appreciate you guys being here. Thank you. Remember, important disclaimers, I'm not a financial advisor. I don't have any qualifications or certifications that would allow me to give you financial advice. Nothing you see or do or hear me do here or anywhere else is a suggestion or recommendation to do anything for entertainment purposes only. I'm just an idiot from YouTube. Make sure you read CFTC Rule 4.41 on simulated trading, which is what this is, even in funded prop firm accounts here on Topstep X with XFAs. And the affiliate and partnership disclaimer that says I stand to make money from links in my content, like we talked about. Read that down below. Read all that down below. Fully understand that. It's been awesome, guys. Later, Mike. Wife says bye. Tell your wife I'm married. You know, I mean, it's your wife, but you know, tell her I'm married. Thanks for the stream. I'll talk to you guys soon. I'll see you in Discord. Hopefully see you in Discord. Hopefully you guys will talk it up. We'll give away some prop accounts. Stay tuned. I'm going to be giving away a bunch of stuff coming up. I'm psyched for some new stuff we got rolling out coming in the coming weeks, and be awesome. But again, great stream. Took a win. Green across 4 accounts. Nothing major, right? But a nice little $575, somewhere around that level. I'm cool with that for now. I'm going to get some scalping in. I'll keep you guys updated. I'm going to try to get some scalping in on Tradeify accounts, put a day of trading in on those, and update you guys from there. Talk to you soon. So Mike says, so is she. I'll see you guys. Thanks again. Thanks for the laughs.